everyone, and welcome to today's webinar with American West Metals. I'm Danica Warburton. I'm the Investor Relations Representative for American West, and I'm delighted to be joined by the Managing Director, Dave O'Neill, who's going to walk you through some of the outstanding recent developments that the company has published to ASX, as well as a bit of a focus on progress made at the Storm Copper Project. So the format today is going to be a short sort of 10-minute presentation by Dave, and then we're going to open it up to Q&A as we've received lots of investor questions. So without further ado, I'll hand over to you, Dave, to provide the presentation.
Thank you, and thanks everyone for joining, and happy Easter. If this is the last thing you have to do before the break and you get to have a drink after this maybe. So let me share and see if I can, my screen. Fantastic. Again, thanks again everyone for joining us today. And as Danica said, I think it's been a busy start to the year, and even though it's been a fairly slow news year, as you can imagine, putting the PEA and then obviously the commercial agreement together has taken a lot of energy and time, and I think really sets the foundations and underpins what we're going to do at Storm from now on. There's lots of things going on at the other projects as well, which I can touch on briefly, but at the interest of time, I might constrain this to Storm. But look, there's questions on West Desert and Copper Warrior. We can take them at the end. Like, this is a publicly out, but again, you know, obviously read the disclaimers and important forward-looking statements, etc., before making any investment decisions, as you guys know. So, look, like I said, lots going on at the start of the year, and I want to talk about specifically the PEA, and I won't go into all the detail. The document's out there if you need to read it, and I'm always available for further questions as well, and I'm sure there'll be questions at the back end of this around that, particularly how things work there up at Storm. The other thing is obviously the strategic alliance with Ocean Partners. It's worth talking about. That's been a massive boon for us, and is going to set us up for the future, absolutely. And I also want to talk about quickly news we will be putting out in the short term is around what the exploration program and the other activities look like for this year, which everyone's probably dying to hear. And now these other things are away from us, we can actually get into start the project level reporting, etc. So, but not to forget West Desert and Copper Warrior as well. We are doing things behind the scenes there. There is a lot of interest in the Utah projects, particularly in the States, given we've had a change of administration and things are very crazy. Good and bad at the moment. So look, West Desert is we're progressing the permitting side of that to make sure that that's ready to go for the drill rigs, and we're also looking at some commercial deals for that, whether it's, you know, project level funding or spin outs or things like that. And the other thing is Copper Warrior as well. There's a lot of interest in that. Obviously the copper is very prudent at the moment and hot topic, and we're looking at extending that option agreement and also looking at some commercializing that in some way, and whether, you know, we can't do all three things at once given our current team. So whether we have, you know, help to come in and progress that project as well. So we'll aim to get some more news flow in the coming weeks out about all of these other things. So let's go straight to the PEA. I mean, this is a big moment for the company and the Storm project. And as you can imagine, there's been a lot of work to put into this, and it's been the last 2 years we've been working on getting out the initial economic assessment of this. And look, if you go back to the metallurgical work, the DSO work we put out last year, the reasoning why we had to, we transitioned quite quickly last year into doing the infill drilling. None of this could have happened, including the Ocean Partners agreement, without having that indicated part of the resource and being able to get a mine plan together that's kind of economic. So in hindsight, that is, you know, it's good to look back on. Obviously at the time, it'd be good to expand the resource quicker. That will be the intention from here going forward. So, and look, as you can imagine as well, this has outlined exactly what we thought it would, which is a very low capex opportunity, which has got a very robust economics at the moment, but it's only going to improve bringing some of those new discoveries into the mine plan, etc., over the coming years. So nothing's changed around the time frame to get this thing up and running. we're still sticking to our 2 to 3 years from is the typical process, and you can read a bit more about the permitting environment and process in the PEA, but we've well advanced on all of the long lead items like the baseline, the environmental studies, the community liaison, the things that take time. We're very advanced on that. So we're pushing very hard to get this into production as soon as possible, but not at the expense of expanding the project from an exploration sense as well, which I'll talk to. And look, some of these numbers I'll actually get and explain in a little bit more detail in a couple of slides' time. So look, and again, we couldn't have done without the PEA. We could not have had access to this kind of strategic alliance that we've just recently formed with Ocean Partners, who are a global metal trading advisory company and financing company. So these guys, and look, absolutely, there's been other mining companies in the room and circling. And to be honest, I've worked for some of these big companies, as some people may well know, and know how they operate. And I think aligning ourselves with someone who wants to buy the copper at the back end and can fund the project without influencing and changing the exploration potential or trying to partition Storm into one bit and have the remainder of the belt being explored separately is a massive win. And I think that way, with Taurus, with Ocean Partners and ourselves, as a shared goal of getting this thing up and running as soon as possible and getting cash flow, which we believe will actually open the belt up further and will be allowed to put a lot of that money back into the belt. Who is Ocean Partners? Like I said, they're a global company. They specialise in everything that all the other metal traders do. They're very nimble, and because they're not the I won't say some of the bigger companies, they can operate very quickly and come up with innovative marketing and blending and different buyers, etc. So they've got a good access to that kind of thing. They actually what really got us over the line and why I think they're a very important part of our sort of technical team going forward is that they are developing a zinc lead mine in Ireland that's going to be doing, I think it's 8 to 9% zinc at the moment, but they can get an upgrade of 2 to 1 up to 18-20% zinc, and they'll be sending that to Europe. So they're doing an ore sorting operation. They know how to build the thing, they know how to export the stuff, and they know how to sell the stuff. So that's one of the key things. But the other thing is they're also doing DSO out of Africa and other places. So they've got exposure to copper concentrates down to 10% copper. So they've got sellers for that material, and I'll talk to the processing side of that and how that may reflect and impact Storm in the coming slides. But they also do the traditional sulfide, so copper, lead, zinc, sulfide. They've funded some big silver mines and other mines around the world as well. So the full spectrum, they can help us out. And I think particularly in this more, a lot of the feedback we've had is you can't do a DSO and you can't use ore sorters for this, and this, and that. This is clearly a way of saying, yes, you can. We've got a market for it. We've got a buyer for it. And this is how you do it in the real world. And so that's, I think, why we're so well aligned with Ocean Partners, and it's going to be a very good partnership going forward. Everyone knows where Storm is, hopefully. Now, I was just up at a Calvert last week talking to the government, which we can talk to in a while. And what surprises me, and is a little bit apparent, but is more apparent now, is that these are the current operating mines, but there's a lot of exploration going up here as well. And it's not just these mines. It's a bustling area. There's going to be competition for manpower and resources, and so it is good to be at the front end of that and pushing the development now, because as some of these other exploration projects come into being in play, then we want to beat them to getting the best people. So that's look. And one thing I must mention as well is that we met the minister and at the mining symposium, and during his initial speech, Storm Copper was the only project that he mentioned, and that we're in the company of Ignigo Eagle and B2 Gold and a few other big companies that pay billions of dollars of royalties, and we got a mention. So that's felt really good. It shows that there's a lot of strong support and interest in the project. Like I mentioned, quickly is that, you know, the resource here is, and what the work we did last year is really to really firm up the indicated side of the resources. We're lucky that, not lucky, I guess Storm's made the luck for us, but you know, it can go the other way. Sometimes you drill out these things and you find holes in the ore body, but that's certainly not the case for Storm. And a lot of this has been, you know, this volume we've indicated as a starting point has been allowed us to and put out this study. So as you can see, like the resource is smaller than the global resource, and that's because we're taking the best material and the material that we think is going to be the most optimized to go through our ore sorting and DMS style plant at the back end. 100% open pittable. We're yet to find a large underground ore body, and hopefully some of the exploration we do this year finds those. But as we know, some of the, you know, particularly parts of all of Chinook and parts of Cyclone are absolutely underground mineable grades. And so finding more of this mineralization depth is going to go a long way. On the processing, so look, this picture is way more complicated than the actual process. But essentially, we made the two products, and nothing's changed here. And look, it's really good to put a PEA out to show, look, that this is what the kind of plant looks like, and this is what all the add-ons look like. So the logistics and the camp and the airstrip and the MLA and fuel farms, et cetera, is the bigger components of this PEA. Now, talking back to Ocean Partners, and look, we designed this around 18 to 20% copper. So that we found was optimum for the ore sorters and where we get most of the volume of the rock through the ore sorters. And we get the 30% of it being upgraded with the inline pressure jigs. Now, we've in discussions obviously with Ocean Partners and some of the other operations, if we can operate down to 15% copper, then we see the recoveries go through the roof. We see more ore going through the ore sorters, which gives more copper out the back end on an annual basis. And so this is the optionality for us, is working with these guys are really about now going to that next level with the spec. Because if we can actually remove the DMS part or the pressure jig part of this process, then we slash the capital cost at the front end, because this whole thing's about 21 million US. If we cut that, it's going to take it down to about 12, 13. So straight away you can see savings if we can optimize this process further. So that's the opportunity here, is to really get into this during the PFS level studies. Now, the beauty of this, and this is what the people of Nunavut are really excited about, is this chemical-free lack of tailings opportunity here. And when we talked about it, you know, we even got told that this is actually not even a mine. But it is. We're going to have big open pits over 1 kilometre long, but at the end of the day, this can be packed up and removed very easily. So the closure part of this is going to be very much simpler than the big flotation plants and things like that. Now, well, I'll get into the next bit here, but the mine plan is, as you can imagine, relatively short at the moment, and we're considering this PEA. This is stage one. This is clearly the first part of Storm. This is underlining it, saying this can make money as is if we don't find another pound of copper. There are no guarantees in life, but I can point to 2 places already where we are going to add tons. And that's why there's the upside here, is that this is stage one. Now, the beauty of the processing plant is that the ore sorters cost about $2 million each. So if we want to increase production, we don't need to build another flotation plant next to it at the same cost. We can actually incrementally increase this to get throughput up. Or if we just want to add tons and maintain the throughput, it's going to extend the mine life for any new discoveries we had. So that's the opportunity here, is to really beef out the back end here with new discoveries. Even a 3 to 5 year mine life extension is going to have a massive impact on the NPV of this. And so we're confident of that. That's what the work going forward is going to do, is going to add to this. And it might take time, but we have time. So, you know, all of these things take time and money to do. So we're going to be very careful and diligent about how we progress this going forwards. Now, the other thing I will point out is that we have done, and there is work in the PEA that, because what does stage two look like? Like I said, it could be an extension of the current plant. and we can expand it, but can just extend it through, adding to the resource life. But we do know that this actually does float very well. So, we got asked why bother doing that. Why bother doing a float? It gives a bad look. People think that the DMS doesn't work. It's actually de-risking. You want to know every opportunity. The opportunity here might be the 0.5 to 1% ore body that's 100, 200 million tonnes. That won't go through here as efficiently. Parts of it will, obviously, but then what if it's, we have to build a flotation plant at stage 2? Well, hopefully we can have the cash to do it when the time comes, but we also have the time to be able to prepare and optimize that process further, because we know this can be treated with traditional DSO, DMS, and also through flotation as well. So it gives us that optionality from a operational level. Just quickly, look, we did really try and skin the cat with this and put every cost we could think of into this. So it is fairly conservative. If you look at the copper price, you might say that that's quite bullish. Well, at the time it was sitting about $4.45, and everything I've seen in terms of the copper markets and long-term pricing is sort of sitting at that. So we think it's a fairly realistic price in the next 5 years, but we shall see. Everyone's crystal ball, does it work? This has got a fair bit of downside protection in a way that we can actually do a couple of things. We can reduce the capital, so we can actually make the plant smaller by cutting out an ore sorter, and also taking the DMS plant and just putting 70% of the feed through, and then stockpiling that other material for another time or another different processing method. So there is ways to actually refine this as we go in the next 6 months to a year. I was to say here, other than look, the cost. So the clear thing is the life of mine capital and the cost. And so two things. So the costs are obviously based on an economy of scale thing. So as this grows, the costs will come down, and we obviously we can't compete with the Escondidas that have been there for 30 years and process 12 million tonnes per annum and can get things down to peanuts. And so, as you can imagine, a smaller mine at a slightly higher cost, because we're got diggers and the power's not being spread out over more tonnes, etc. So that will come down, we believe, as we expand the mine. And the other thing is the life of mine capital. So we believe there will be costs between now, obviously, and initial development, etc. And that's going to include prepping the marine laydown area. It's going to bits and pieces to the camp, doing the transport corridor, bits of permitting. We want to do a bulk sample through, I'm not sure yet how big, but certainly a production size sample, which may give us some copper in the short term as well. So we're working on the permitting around that. And then there's obviously, we'll start with ore sorters in the first 3 years or so, because they're all coming out of Chinooks over 2% copper. So this gives us very, very good recoveries and allows us to bring the inline pressure jigs in about year 3. So that's delaying some of that capital. Now, if we were to just go ore sorters only, and one piece of work we're going to do in the PFS is actually, we've used one OEM, we're going to try a bunch of others that they say they can get it actually finer, which will increase, potentially remove that high inline pressure jig part of the, if we can get the performance down and do 4 mils, then that may remove the inline pressure jig part of the circuit. So that'll save us another $16 million. So this is all to be worked out in the PFS, but again, it's giving us that optionality. Sensitive, as you can imagine, I won't touch on that, but it's copper price and mining being the biggest ones, as you can imagine. Now, we'll quickly touch on this, and there's more to come in the coming weeks as we finalise our plans. But in terms of that resource growth, to me, it's a no-brainer. We've got things like the Gap and Cyclone Deeps ready to go. We can drill those out. We've got the RC rig on site, so we can very quickly put a few holes around these things to add inferred tonnes very quickly. But look, I think the things like the Cyclone Deeps, the Cirrus Deeps, they are key targets. We know that a good portion of Cyclone will be mineable, given the thicknesses and the grades at depth. And so traditionally, in most of these sort of systems, between the Graben fault is usually the best trap for copper sulfides. We have had a sniff of that with cyclone deeps. We believe we're on the margin of something, and we know that, you know, if you look at one of those butterfly maps that you see in the with paint when you used to do it as a kid, we think cyclone's at least a half of something that's very special. And look, some of the work we're going to do in the initial stage of this exploration program coming up are going to be testing some EM and IP anomalies that we have along this corridor that look like it may be the second half. But notwithstanding that, there are a bunch of other things along here that we will need to test. And so if that tends to be the case, then there's a potential to add tons very, very quickly here. As you know, if you know, finding another cyclone is probably the gold star here, because you instantly add another 15 to 20 million tons very quickly. And you use less drilling to do it, because the big ore body, it's got a big, I guess, geometrical footprint. You can very quickly test along there to see if there's something similar. That's kind of why it looks like an intersection. It's a fair way down. It will be an underground opportunity. But look, you know, you think about this as the 1.25 million tons per annum now. That's generally what a lot of gold, that's what Bellevue is doing, for example, through their gold mine. So that is a perfectly sized underground operation. So as you can see here, there's a central core to cyclone, and all of this will be underground mineable, given the thickness and the grade. So that's going to be a focus, but it's not the only focus. The exploration program is going to go very wide. We've got some great targets down at Tornado. There's some historical drilling that's got copper sulfides that was never sampled. So you know, that could be an instant win for us without drilling a hole. And similarly, it looks like we might have evidence of further holes 5 kilometres to the west of Storm as well. So potentially that Storm Tornado corridor could be over 20 kilometres long and have copper all the way along it. So that's exciting. So we want to put more work into that this year. We want to roll out some more generative type geophysics. So there's some other techniques of EM that we're looking at employing this year. And, you know, also doing some shallow exploration and also some deep stuff. But look, it's going to be leveraged to expansion as rapidly as possible. So, you know, rather than do the incremental tons, I think now it's time we've got that indicated, we've got that mine plan. I think people would be happy with it. Large volumes of inferred, for example, that we can infill drill at a later date. So that's the idea. What it does, obviously there's a couple of caveats and carrots out there, like the tourist royalty, which is a tonnage-based milestone. Those things all sit out there in the future, and so getting that to the soonest time possible is going to obviously give us more money. So look, that's it from what I'll really go through, other than, you know, we're going to explore and we're going to have a parallel strategy this year. We don't want to delay anything with the development. So we do need to push forward with some of the PFS work, and that looks like met sampling. Well, not met sampling, we've got the samples, a little bit of met work. Like I said, using different ore sorters, doing some comminution, really fine tuning it, seeing what it looks like recovery wise at the 15% and within that range, and what is the sweet spot. There's the enviro work, we need to finish that off. And then there's the community work we want to progress, and obviously OPEX and capital numbers we want to really refine as well. And there's a really good opportunity here, like I talked to before, of bringing those numbers down. So, and then also the resource expansion, and that could look like, you know, a few holes here and there, or could look like, you know, and inferred resources, or if we find something in the far regions of the belt or whatever, putting a couple of holes around it and chucking the exploration target around it or whatever. So look, we want to grow this quickly. We think that's where the value lies. You know, a lot of people want to see us get this into development, but I think there's also that exciting exploration space that we want to progress as well. So that's about wraps that up, and I think we should take questions, because I think there were some good questions in there.
Thank you, Dave. And so we'll stop sharing the screen, and we have, as you mentioned, received quite a lot of questions. I've managed to trim them down into about 8 key ones while you've been presenting. So if everybody on the call bears with us, we'll try to get through them in the next 10 minutes. The first one being from Michael, who touched on, well, he first congratulated you, and then he said you've locked in US 40 million from Ocean Partners, which is fantastic, and really helps de-risk the project. How will AW1 secure the rest of the funding for Storm?
Yeah, look, so a couple of things to note. So the economics we did two. One was 100% equity model, and that's the 149, 150 MPV, and the 46 IRR. The other one we alluded to was 100% debt funded model, and that's I think was 135 IRR. But obviously the MPV comes down because we've got debt to pay, etc. So they're always a blend of the two, and it's either 75-25 or 80-20. Like that's what we've come up with. So how do we fill that gap? Look, there's a couple of ways, and our preferred way, and one we're exploring in a lot of detail, and we actually have an advisor working with an advisor in Canada on this, is that there's a lot of Canadian government funding for development. So innovation, development, ESG, and community support and things like that, and particularly up in places like Nunavut, Northwest Territories, etc. They're trying to bring development into the area. Yeah, and look, we are, and also, it's a 10 million. That gap is $10 million. So it's not like we have 100 million to fill from a $500 million build. So that's the obvious place to look first. Look, and then you can come down the list. The last one being obviously more equity that we capital raise, etc., etc. But look, like I said, there's the next between now and development. We have to survive as a company, and also we have to be effectively progress the PFS and the development activities. So we do need working capital. So that will depend on some of this funding as well. We're looking at funding for drilling support and also community liaison support as well. So all of these behind the scenes, there's lots going on in that regard, and hopefully one of those comes out. But look.
And you mentioned the view to limit sort of shareholder dilution is front of mind there. I think that's what people want to know.
That's absolutely key. And look, and that's not the only option. There's a lot of things coming out that will work now that we've got this the PEA away.
Perfect. And a question from Dave, who emailed me, and thank you, Dave, if you're on the call. He says, assuming all goes to plan, what's the big champagne moment in the next 12 months? Is it a permitting milestone first, or a monster drill hit?
Oh, I'd always have to say monster drill hit, because everyone loves a good drill hit. No one more than myself. And so the limit around the PA now is the mine life. And we know it's a soft limit and it's going to expand, but absolutely, we get a big drill hit, then we can do two things. We can demonstrate more scale, mine life longevity, obviously, and then that, obviously there's a lot of investor interest in that kind of thing. So hopefully it sends the price up. But look, that's the explorationist in me saying that, and I think that'll do the best for our price and the growth potential. But the other thing is the permitting side of things. So there's little wins that we are working on. We're doing some re-permitting in regards to having on-ground transport. And it may sound boring to the average investor, but using less reliance on helicopters, being able to drive on the ground, where our road's going to be during the mine site, and all that sort of stuff, it goes a long way to saving money and being more efficient. And that has to be one of our key strategies going forward. And so look, we're becoming more efficient year to year. That's it, and that's the goal, and that's the learnings that we're picking up on. And so they're little wins. They might not be champagne moments, but they absolutely take a fair bit of weight off the shoulders as well. So.
And on the permitting side, do you think there's many dragons still to slay before you earn the badge? To quote one of the questions here, or do you think they're quite well progressed and laid out, and it's simply a matter of ticking off the milestones?
Yeah, and look, our project is uncomplicated by its land ownership, which is it's 100% Crown land. And look, we still liaise with all the Inuit associations in the area and the hunters and gatherers and all association and all of that sort of thing, because everyone gets through the area and uses the area. But it really does streamline things, and there is a very clear pathway to doing that permitting, and it's always followed to a T. And so it's very clear. Very few things come out of the work and surprise you on this. And so there's really good communication between the various groups as well. So it's fully transparent. It doesn't wait till the end point before, if their red flag pops up, it gets dealt with quite early. So I think in terms of dragons, no dragons, maybe a couple of puppies, but and they're the things that we're on top of already. They're like we on the front foot with the environmental work, like we're doing the baseline studies, getting the weather data. Most companies I'd say would have only committed to doing that work once the PA was away, but we started that 2 years ago with the belief that we could actually get this going, and that's just about rolling the sleeves up and getting active. And so those things are paying dividends now. And back at the time, you could think that, yeah, you're taking a risk, you're spending an extra bit of money that you probably didn't need to, but I think it is really putting us in a good position now.
And I guess they're behind the scenes activities that shareholders may not be aware of, or that may not contribute to share price re-ratings or anything like that. There was a question from Robin around why do you think there may be some sort of weakness with no adverse news? Quite the contrary. Do you think that the ongoing sort of US and Canada trade tensions may be impacting overall sentiment? I mean, overall in the market it is, but specifically for American West and Storm?
Yeah. Look, I think we put a lot of investors offside last year because the mid change to doing the indicated and beefing up the resource, and that was a clear decision to get this PA out of the way, and look, that it really has opened the door for us. So that decision now in hindsight was kind of good. And again, the bad weather and using that extra money and committing to a sea lift quite early in the year, you have to do these things when you work in these kind of parts of the world, and that did put us under a lot of pressure sort of financially at the back end of the year. These are all learnings, obviously, and I think a lot of people were disappointed with the resource. And look, that's the 400 and the 500s, they will definitely come, but these things take time, and maybe investors were unaware of that time horizon, etc. So that's perfectly acceptable. But look, so there's things we can control as a company, and I think now we've set on the course that it's on a path to extreme success, which is good. I mean, you think about the Western areas and the Jubilees at the time. They started on mines that I think both of them started on about 10 to 20,000 tons of nickel, committed to mining, and then turned these things through organic growth into being these multi-billion-dollar companies. Sandfire and obviously Sirius were a little bit quicker their ramp, but these things do take time. But I believe American West Metals is on that kind of pathway, very early days. But the other thing with the market, absolutely, I mean, no one would have seen what's going to happen with this Trump stuff in the US. And look, I think for us, for copper, it's good. And I think for US and Canada, it's good because Canada doesn't want anything to do with the US. And look, there's no copper smelter that we would go to in the US anyway. They're full.
Okay.
So our biggest markets would be Europe. The Mary River iron ore goes to Rotterdam, straight across the Atlantic. We could send our copper to the copper smelters there. We've got all of Asia, and we've got Canada. So everything we need, we actually do not need to go to America. And similarly, West Desert and Copper Warrior, they are now in this insular environment where they need all these metals that we have. We're going to look at the gallium and the germanium for West Desert because we've got tons of the stuff, but we just haven't measured it. So it's in all the drilling. And so this is the exciting thing for West Desert, is that we're getting taps on the shoulder from Defense Department and Department of Energy and all these people saying, what are you doing with West Desert and how can we help? So it's working both ways. And I think, being like ASX is a company, obviously that's probably the only place that's really affected us, I guess. It's not a local market.
No, well said. And great, because there was a few questions that came through on your plans for monetizing West Desert. I am conscious of time, so I'm going to go back to what you said about resource growth for Storm. There's been quite a few questions. We're going to try and put it into one. What are the highest exploration priorities for 2025? And are there any outlier geological opportunities that you think the market might be underestimating?
Yeah, look, I think now, like we have to look after the project in terms of development and future mine life. So the exploration team in me wants to go to the far ends of the belt and put holes in there. But to be honest, what value is that going to add? And that can come in time. I think you need to go where we're going to have the most chance of success and expanding it quickly. I think those are the two key things. So our initial targets will be to finish the Sirius D Deeps hole. That obviously stopped because it was in fractured ground, which is a good thing for copper. So that hole will be the first cab off the rank. Like I said, we've got the cyclone Deeps, and if we can find another cyclone, that's the quickest way to add tons. And look, and I think that potential exists, that tornado, blizzard, and a new prospect, which we'll talk to in the coming weeks, to the west of Storm. So I think that 20K corridor, one, can feed any operation, and two, has the low-hanging fruit in the short term. Outside of that, the whole belt is live. Like I said, we've got copper at both ends, exposed at surface. And so why not do that year 5? Why not do that year 10? You know what I mean? This is going to be a 30-year operation. If we go out there into there and do wildcat holes that are we miss, then it's people perceive that as a negative, where you just need more work. You just need more time to nut it out. And so there's a risk with that. If we just did that and nothing else, then could quite quickly put a constraint around Storm in people's minds. So, it's going to be a balance, and a balance with money and a balance with priorities and expansion. So lots of juggling.
And absolutely, sounds like it. And both Tom and Alex did ask when the sort of new discovery zones are going to be incorporated into an updated study or mine plan.
Yeah, well, that will depend on how quickly we can expand them, and then our confidence in that drilling as well. And so, like I said, we do have an RC rig on site which can move very quickly. So, look, I think new discoveries are going to have the biggest impact in price, and also show people that this really will be a long life mine. And so, but notwithstanding the fact that this season will be important to add some extra years into that mine plan. So look for both. Yeah, we'll try and do both. And I think, at the back end of this year, if we can, we'll do it with the PFS, a resource upgrade, that'd be, good timing.
Yep, absolutely. Thank you, Dave. And two more. So the PEA outlines rapid payback. How confident are you and AW1 in these assumptions, given, inflationary cost pressures and the logistics risk? And then tying into that, Dave has asked, with the Arctic logistics, are you confident with those, and what's the plan B around if the seasonal window tightens?
Well, and it's, again, I did there's really good comparisons against other operations up there. And look, the ships, there's never been a year that ships don't get in. The beauty of the current, and look, and I was discussing this the other day. If we were a 12 million tonne per annum plant, we'll look at Mary River does 64 ships every year in that few month period. 64. So every week they've got multiple ships. You can imagine there's a fair bit of environmental oversight on that. The current mine plan we have is 4 to 5 ships. So it's an order of magnitude smaller, and therefore it's much more manageable. If we have a window change, we can actually put 4 of those ships into 1 week and get everything out in 1 week. That's never been the case, and in fact, it's probably going the other way. And so the shipping part of it is probably one of the lower risks. The other operational risks, I would say, is how efficient can we make the fines part of the circuit, or can we eliminate it altogether? Because that is an expensive piece of kit, 15 million or so. Can we improve that? Are there other machines that can do that? So that's not the weak link, but it's the bit that can be improved the most, which you consider as a risk, because more copper tons out the back end. So ore sorting is very, very low risk, almost completely unrisked. And so I think, further work in the PFS is going to really nut that out.
Okay, perfect. Thank you, Dave. And to wrap up with, got a couple more minutes. Are there any final thoughts or comments on the growth outlook that you want to share with investors today?
Yeah, absolutely. I think a few things. Again, from our, being up in the area last week, is that we're not alone. There's a lot of companies out there. There's a lot of business going on, and it's almost like, let's not call it Kalgoorlie, but to them it is Kalgoorlie. Like, it's easy to sit here and think it's far away, but when you see the activity going on there, Agnego Eagle, the amount of renewable energy and the amount of people they're using and need, and the training going on for diggers and trucks, et cetera, it's actually mind blowing, and it makes you really feel welcome and that you can actually do business there. The other thing is that time, these things do take time, and the market is very, very impatient, and as our investors will know very well. And so if we look at, we think we've got a whole belt. We've got 2,000 square Ks. We are, with our joint venture partner, 100% owners. We don't need to give any of it away. We've got a fantastic partner with Ocean Partners who can help us monetize the copper there for a very, very long time. And so I just get people to reflect on the Western areas and the Jubilees and the Sandfire resources and how these companies came into being. I think that's a pathway we want to be on. You make the money and then use that money to grow the thing. Let's not blow it up now. Let's not try and put all our eggs into a very high risk strategy now. We have customers now that want the copper. We have to look after them, but at the same time, grow the thing as quick as we can, so you guys get your returns as soon as possible. So it is a balancing act, and that's what we aim to do. But we just need some time to do it, and we don't always get it right. And not every drill hole is going to hit copper, particularly when you go out further and you're doing more exploratory kind of work. But I'd just say, look, have a bit of patience. I think we've been pretty good at delivering the technical side of it so far. I think we've over-delivered in how much drilling we did last year with new discoveries, the resource and the PEA, and now we're commercially showing that Storm is a very in-demand project, and that should hopefully give investors confidence that we're here for a long time.
Absolutely, well said, Dave. And thank you to everybody who sent through questions. I am sort of looking off the screen, so if I'm a bit distracted, it's because we've had a lot through, and if we haven't got to you on the call, we will reply personally after the call. We will be sending the replay around tomorrow. That concludes today's webinar. We will, as I said, be available for any further questions. Our email addresses are at the bottom of the ASX announcements. So thank you, Dave, and thank you to everyone who joined.
Yeah, thank you very much, everyone. Have a really good Easter.